7 must-do mortgage application tips. Beginner's guide. Choose the right mortgage lender first time as a first-time buyer. This is the first step. There is a skill and an art in understanding which mortgage lender is best for your circumstances. It's not like it was 20 years ago where all you needed to do was choose the mortgage lender with the lowest rate and they would lend to you as long as you could prove you had some type of pulse. Today's mortgage lenders provide different amounts you can borrow. Some specialise in certain property types, others in employment types. It's all about finding the right mortgage lender for your circumstances, and my best advice in today's mortgage world is to use a mortgage broker who should get that right for you first time. If you want that right first time, then just book a free, no obligation chat with me. The link's in the corner of the screen or the description below. Have all of the mortgage documents you need prepared first before you apply. So have some folders on your computer or phone named appropriately, which includes your ID, proof of address, proof of income, bank statements, proof of deposit and any other associated documents. This is so you can hand everything over to the mortgage lender immediately from the start, therefore not denying your application or slowing it down, and starting on the front foot, which is what the mortgage lender will like. If you'd like more details on exactly what those documents are and to download the folders that we've created for you, just download our free online course at mortgagechain.co.uk and select download free first time buyer pack. Answer any mortgage lender queries immediately during your mortgage application. This will show commitment and, more importantly, will not delay your mortgage application if you're asked to explain something. And if you are asked to explain something, then keep it simple and do not attach motions. And if you are asked to explain something to the mortgage lender, then keep it simple and do not attach emotions to the scenario. Even if it was an emotional situation, just keep it simple, short and straightforward. Make sure you've got the best mortgage product for your circumstances. Now, I'm not talking about the actual mortgage product such as fixed rates and variable rates and things like that, because the mortgage advisor will help you there. But something which is often missed are loan to value tiers. Mortgage products tend to get lower in rate the more you put down. This is usually in tiers of 5%, 10%, 15%, 20%, 25% and so on. You might be an additional £500 away from having a 15% deposit and a much better product without realising it. So always be aware of the percentage you're putting in as your deposit, and if you're close to the next tier product, then consider putting a little bit in if it's reachable to get that better deal. Understand the criteria of the mortgage product you've taken. These are questions you can ask the mortgage advisor or lender. Can you make overpayments without a penalty? Is your mortgage portable? This means you can move home before the mortgage product expires without paying a penalty. Make sure there are no extended tie-ins after your mortgage product expires. Make sure as a first-time buyer that you're aware if you are taking out a repayment mortgage and not an interest-only mortgage. A repayment mortgage means your mortgage balance will reduce over the term, and an interest-only mortgage means you will not pay a penny off your mortgage. It's very unlikely that a lender will allow you to do an interest-only mortgage these days as a first-time buyer, but it's good to be aware of what you have. How long does your mortgage offer last? This is important as you might need to reapply if your mortgage expires and you haven't yet moved into your property. What is the fee that the mortgage lender is charging? Are you paying this up front or are you adding it to the loan? Adding it to the loan will attract interest at the mortgage lender's standard variable rate. Have you been told that? Are there any conditions tied to your mortgage? Maybe you need to pay off a credit card before you move in. These are all questions that you can ask your mortgage lender or broker or advisor to ensure you're fully aware of your responsibilities. Do not use credit cards and take out loans or hire purchases during a mortgage application. When you apply for a mortgage, the mortgage lender will take a snapshot of your credit situation, and at any time during the mortgage application they could carry out another credit score. If your snapshot does not match, this could have a negative effect on your mortgage application. If you've taken out more credit, then this will reduce the amount you can borrow, as well as potentially reducing your credit score, and therefore you could fail the lender's credit score later on down the line. Mortgage lenders don't usually do another credit score later on, but this can happen randomly, and especially if your application is weak, and they may carry out a soft search at the agreement in principle stage and then a full search when you apply. So anything done in between that sort of stage could have implications. Don't panic if problems occur during your mortgage application. Now, if you're applying direct to a mortgage lender, then you might not be provided with information that could overturn a mortgage application problem. Quite often you're just told that the mortgage has been declined, when there's often things you could try to do to overcome them. For example, if the property you're buying is downvalued, ask the lender if there's any other products on higher loan to value tiers. If you're already at the maximum, like a 95% mortgage product, then this might not be an option. If the mortgage lender is not going to lend you the amount you applied for and there's a shortfall, then you can request a longer mortgage term, as this can spread out the affordability, reduce your mortgage payments, and sometimes the lender may lend you a higher amount. If you're already at the maximum term of 40 years, then this won't be possible. Some mortgage lenders will lend you more with a 5-year fixed rate. So if you're on a shorter mortgage product and you need to borrow more, then maybe considering a longer term product could help and lend you more. Finally, if you have pension payments on your payslips, then mortgage lenders may allow you to go to age 75 without any proof of pension. So that's a good one to check. Paying off debts can also help you borrow more if a shortfall is a problem, and you don't have to pay them off immediately just before the end of the process is fine. So I hope these tips have helped, especially if you're at the very early stages and especially if you're looking to apply direct to a mortgage lender. If, however, you are looking for a mortgage broker to help you through each step of the process, then just get in touch and book a free, no obligation chat with myself using the link in the corner of the screen or the description below. Mortgage warning. As a mortgage is secured against your home, it could be repossessed if you do not keep up the mortgage repayments. So thanks for watching today's video. Please check out the show notes for a recap with access to any links discussed today. And please do consider subscribing. It really does help the channel. And there's only a small percentage of viewers that subscribe as well. So I'd love if you could subscribe, and I promise to keep the content and tips coming all the time. Have a beautiful day. I'll see you in the next one.